Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again at euro currency. So actions, absolutely madness on the markets right now across the board, not only on the euro, but you can see on the gold market and other currencies, equities. So everything is going crazy across the board. So actually, yesterday event has happened that really triggered this strong action on the euro currency, and I will tell you and show you what really has happened. So we'll take a look at the treasury yields. This is the 10-year yield of the United States. So this is a treasury yield bond daily chart. And you can see that despite the statement of the Fed, market here was minor bounce here. But after that, yield has dropped to the 275. It was the breakout to the downside of this consolidation, and that made a strong impact on the United States dollar. So as you know, United States markets right now are very sensitive to the difference between the short-term yields and the long-term yields. This is called as a spread. And when the spread tightens, and sometimes it even becomes inverse when the shorter-term yields greater than the longer-term yields, this is the well-known sign of the possible recession starting. And that's why in recent few months traders are very nervous about this. So here everything was very, very nice. So we remember we even talked about this treasury bond yields. Sometimes we put in our reports, since market was on the way to our targets, and 325 was healthy yield level, but then something starting to going wrong. Market starts dropping. Right now, its recent lows, 275 is just 25-point difference to the Fed Reserve rate. So it's very tight, and this is the daily chart. Currently, guys, it's very difficult to say what the reason was for that. So either investors do not believe in Fed policy and they expect they see signs of the recession, which also stands on the table, but as we talked about in our weekly reports, it should be somewhere a bit later. Or that was just some assets rebalancing before the long-term holidays. And currently, it's very difficult to answer on this question definitely. So we will see it only after holidays. So there will be some opposite action, or market will continue dropping. But that was really the negative surprise for the market, and that just put everything in a chaotic action, and you'll see what really has happened on the euro. So we've got the breakout. So it means that on the euro currency, at least theoretically, the points that I have talked about recently has been completed. So you can see the trend has been broken. Market maybe not totally, but still exceeds the confidence resistance, although currently, to be honest, it stands inside of it. But anyway, the upward breakout has happened. This top stands above this top and that one. So mostly we could say that the grabbers on the weekly chart now are not valid. And that the signs that I have mentioned previously, and that the signs that are important for us, because this doesn't let us to think about taking the short position immediately, because we do not have any clear bearish context, we do not have any clear bearish patterns. And first we need to take a look at the higher time frame, what we have on the weekly and the monthly chart, what we will do in our weekly report. But currently, talking about this possible upward action, we see that market could climb slightly higher. So currently market also, as you can see, has hit the week monthly period resistance one. But if we'll take into consideration this ABCD target, you could see that the OP stands at the 1523 approximately, which will also will be daily overbought. That's the ABCD target on the daily chart. So probably some other action could start only if when the market will hit it. Also, we'll see what will happen here, whether this will be just ABC retracement or it's starting with something greater. If somehow, by some reasons, market immediately after the holidays turns down and drop lower, well, that probably will be the sign that this was just a technical adjustment of the positions of the traders before the holidays. It's temporal, nothing meaning of the rally that was due to just protection and risk aversion before the holidays. So, but from the technical point of view, logical to suggest the hitting of the next targets, OP. On the 4-hour time frame chart, we have some other targets that point at the same area. So this butterfly also could be formed, has the 127 extension 1527. It coincides with the daily OP. Here we have minor A, B, C, D on the butterflies, also OP in the same area, and we have this inner butterfly A, B, C minor XOP. It's 1554, 25 pips high. So mostly we could say that it stands in the same area. On the hourly chart, guys, the same story. So this is our ABCD pattern. OP has been hit, retracement. Now, theoretically, this overall action on the daily chart could be completed with this butterfly. So because it 1618 extension stands at 1536. It's right here, and mostly it will be sufficient to hit the daily OP and targets on the 4-hour time frame chart. So currently, as you understand, we can't talk about the bearish entry because, as I said, we don't have the context for that. Price action to the upside stands strong. Major breakout take place. The pace of the market shows the thrusting action. So we have the uncompleted targets that stands relatively clear to the current market. So we need to see the resolving of this situation by the completion of this target, and then after that we could watch for some bearish patterns if the context will coincide with this. But currently, mostly context stands bullish, and from the technical point of view, logical to suggest the hitting of the targets that we have on the daily and intraday charts. Here, maybe some retracement could happen, so we can see the reaction on the OP target has been done. Now it's kind of the triangle is forming. Maybe a market will form here the butterfly. Maybe some other pattern could be formed. For example, it could be deep A, B, C, D retracement. Maybe it's not really probable, but at least this cartilage triple to buy could be formed theoretically with the upward continuation. But anyway, currently we are watching mostly for this target has been hit. That's our major OP target on the daily chart, and after that we will see what we could do depending on the market reaction after the holidays on this area. In the weekend we will try to estimate what's going on higher time frames. Maybe there we will get some keys to understanding of this situation. But currently, guys, the most important thing is the treasury yields and its price action. If it will turn in opposite direction and shows the healthy upside acceleration, situation could change on the forex market as well. Until yields will stand under pressure and continue dropping, hardly the appreciation of the United States dollar will happen. So, and whether it's just, as I said, technical rebalancing of the assets before the year end, or something greater or something real, we'll understand only after the holidays.